Hey, what's up, everybody? It's Pete. Welcome back. Today is Tuesday, February 18th, and welcome to today's edition of Stocks for Breakfast. If you like today's video, make sure that you scroll down, click subscribe, hit the alert button to make sure you get the email letting you know when the next videos are coming out. Today, we actually have something interesting. The futures are down, not a big deal. Coronavirus, Apple, or is it just an idea for profit taking? Either way, we got some tradable opportunities today, so let's head on over to the screen, and here we go. So first thing I want to notice is the SPY closed on an inside day. We had the gap here a few days ago, finally broke this resistance. Inside day on Friday. Inside days, if you're a regular listener here, you always know inside days, contraction leads to an expansion in volatility. Today we happen to be getting an expansion in volatility to the downside coming off of the coronavirus news and how it's affecting Apple. That's okay. Let Apple do what it's going to do. It was actually probably overbought anyway. You can see it's actually down over 3% at this particular point. And really not that tradable, quite honestly. You would need Apple to actually take out a new high here. It's actually in an obvious roaring bull market right now. As a matter of fact, we were looking at the weekly chart a couple of days ago, and 15 out of 16 weeks in a row, the stock has been well bid, which means higher highs, higher lows, institutions pushing the stock higher and no reason to get out of the stock. That might be changing now. Even though it's well bid right now, you can see that the news is kind of hitting it. So Apple is not actually on our list of stocks to trade today. The increase in volatility in the SPY is well needed. Quite honestly, I think a lot of people have been hesitant, unless you're day trading, hesitant to initiate new longs. And I hate to use this term, but a lot of people are using the term overbought up here, and you can kind of understand that. Really, how do you measure your risk up here in exchange for the potential profit? If you're trading, you have no problem accepting risk. The question is, where exactly do you say, I'm risking X amount because I believe I'm going to make X more? Typically 3 times, you know, in the trading lingo, you want to take a 3-to-1 risk-reward ratio. Very hard to do, and the market just keeps going up. So we need this kind of a move back here. So you can see the last inside day led to a really nice move to the upside. So hopefully this inside day, taking coronavirus out of the equation, will lead to a decent pullback, which will expand the room between a potential entry and potential profit targets. But as far as today's trade, we have a couple of interesting stocks at or near breakouts, and Netflix is one of them. Whether you love the company, hate the company, we have now 1, 2, 3, 4, 5 for the 6th time in a row. 6 times we've hit this price level and have not been able to get through it. However, if you're an old-time trader and you follow some really old stuff from Larry Williams, he said the more it knocks at that price, the greater the likelihood there's going to be a massive move through that price. It's not a trade yet. You need confirmation. If you're a follower of the blog, you know that when stocks hit these levels and don't go through, you need some confirmation. So confirmation in this case here means we need a couple of closes above this level. Okay, so a couple of closes above, preferably near 390, and then a minimum of the next move looking for 420, but I'm really looking for a nice measured move if we can get through there. So the key here in this Netflix trade is do not enter until you get confirmation, but the fact that we keep getting pushed up to that level, I think we're eventually going to get through. Very similar trade here. And by the way, what we're talking about here is adding trades to your watch list. Even though they don't trigger today, it's imperative that you set alerts. Same thing with Square. We actually called out a long in Square roughly about a week ago on this pause here. And again, I don't like to say flags. It's really more push and a pause. Well, we ended up getting another pause here at this level, clearly stuck at 82.50. But look at the level. 82.50 to 100 would be the next run. So again, you got 1, 2, 3, 4, 5, 6 times for this stock as well to stop at this level. But again, it must be in your watch list. Part of trading is being in the right stocks at the right time, which means you need to set an alarm in Square right now at 83. 2 other quick stocks I want to cover in Stocks for Breakfast right now. The first one is LYFT. And the stocks I'm about to read now have double their normal volume. And obviously, LYFT is getting hit a little bit here over the last few days on earnings, and shares are being dumped. That's really the bottom line. I want to point out something here, that there's a difference between a stock trading double its normal volume and being tradable versus stock doing double its normal volume and giving us an opportunity to just keep it on the radar. And this, I'm really pointing this out because a lot of traders just get out there and they want to trade something that's fast moving, something that's got a lot of volume because they think it's an easier stock to take advantage of that day. But let's take a look at the stock. The stock basically since September has really done nothing other than this little move to the downside and this really 1 day move to the upside prior to earnings, 2 days maybe. So the stock really has zero order flow, zero clarity to whether or not it's obvious buyers or sellers are in charge. So there's no clarity right now, just a pure momentum trade only for day traders. And even if you're a day trader now, the stock is well offered for 3 days in a row, despite the fact that it double average volume on Friday. You have to be careful trading this stock if you're going to day trade it. You want to trade it because it has the volume and the volatility, but only short sell it if that's your plan going on the last 3 days of well offered. Only short sell it if the stock is under today's opening price. So that's the filter you're going to be using so you don't get caught in the stock opening lower, drifting higher. Continue to look for a short, and the stock is just melting to the upside. Next, we have NVIDIA, which is on the opposite and really a different trade. NVIDIA actually has ridiculously great, solid order flow, massive gap to the upside, all bullish. But the question is, do you trade this gap higher from 270 to 290 and change? The answer is no. Again, we're setting up some trades that we're going to look for. Now, the golden rule of trading is if a gap does not get filled within 3 days, generally speaking, it's a good opportunity or a good idea to look for that bullish move, especially if there's bullish order flow and bullish momentum to resume. So I'm also game planning to trade NVIDIA on a pullback, looking for it to come back to the 280 area, not quite fill the gap, and then look for another momentum move higher. So that's Stocks for Breakfast, February 18th, 2020. I will speak to you soon.